Good afternoon. Today is Friday, the last trading day for the week, and the date today is May the 12th. The time right now in Singapore is 2:16 in the afternoon. Now, let's do a little bit of recap as to what Wall Street did last night. We have two major events. One is basically the release of the producer price index, which was marginally lower than market expected. Now, taking that into consideration with the CPI that was released the day before, we can see that generally speaking, the headline CPI numbers are beginning to ease, and that gives the market the idea that the Federal Reserve now have less reason to continue to rate hike, and that means it is positive for the equity market. However, we have seen regional banks share prices continue to slump. Okay, now that is the biggest fear right now, that the lingering banking crisis is not behind us and it could actually get worse going forward. So that caused equity prices to come back down, and that is actually a good thing because we can see the prices down in the Dow Jones come down to 33,127.7 overnight, which is within a bracket of prices which I think maybe will see the re-emergence of buying interest, and that region is 33,251 to 33,354. You can see that the prices is now smack in between the low price of yesterday's. Okay, so right now the market could be gearing up for another move to the upside. Now, if you remember last week, this time, same thing, just before the CPI numbers was released, equity prices were basically going down, and until that, on Friday, we see a surge in equity prices, which is from here 32,937 to all the way to 33,772. Okay, so maybe today we're going to see another surge in prices in US equity prices. So that is a possibility that is quite likely to be seen tonight. Okay, so keep our eyes peeled for that development here. Over in the S&P 500, we also see a pullback, but not as deep as in the Dow Jones. Market pullback 50% to from a low of 4,048 to a high of 4,154 to touch a low of just below 4,100. And again, this price is between a barrier, a range of prices, which I think will actually see the re-emerging of buying interest. And true enough, we did see some buying from the area going forward. That area is 4,098 and 4,101. So you can see prices are still basically holding on, and this is putting up a case for extension of this rally, perhaps to even challenge 4,195, which is the year's high so far. So let's see what happens going forward. Okay, over in the Nasdaq did not pull back at all. The market right now is at a new year high at 13,411.7, which is not very far away from where it need to be, which is basically to challenge last August high at 13,720, and perhaps even to target 14,135, or even to as high as 14,711. So this is the immediate bullish outlook. Now, bearing in mind, we are very, very close to the June 1st, which the US Treasury of the Secretary of the Treasury, Janet Yellen, has been warning us that unless they come to some kind of understanding to lift the debt ceiling, we may see a catastrophic reaction in financial markets. So when you go long in US equity, just remember, June 1st is not that far away. Okay, so just be very, very careful. Over in Asia, we can see the Hang Seng Index continuing to retreat, and now it's going back to test the recent bottom at 19,500. And if we should close below this level, it's setting the stage for further losses going into next week. The immediate support here appears to be the March low of 18,829. So if this level cannot hold, then the market could be doing a larger degree three-way pullback, targeting 16,000 or even to a high of 17,000. So anywhere between 16 to 17,000, we could see some kind of support for the Hang Seng. But for the time being, it is actually quite vulnerable for further selling. Okay, over in the Nikkei, we can see the Nikkei actually traded to a new high for the year. Currently is trading at high of 29,426 as we are speaking. So this high here is no longer valid. We have a marginal high here at 426. Okay, so we can see that I've actually gone in to actually sell this index, because I'm going to develop a sell position starting from now onwards all the way to the high of 30,450. So I'm going to build up the pyramid and allowing the market to actually move another 1,000 points. So basically, I think the market is vulnerable to the downside, especially if there's no resolution to the US debt ceiling crisis. So that could be building up for a move to the downside. But again, this is higher to sell as far as I'm concerned. Okay, so you can take that into consideration. Whereas the Chinese market continue to slide. Okay, this morning it go even lower as we are speaking. Let me see the low traded so far this afternoon is 3,941, which is not very far away from the most recent low 2 weeks ago at 3,925. So if this level is again challenged and close below this level, the market obviously will be targeting a larger degree three-way pullback, targeting 3,936 to as low as 3,760. So again, this is a market that is primed to continue to erode. Okay, over in energy market, we can see that crude oil prices in relation to the WTI is pulling back after hitting a high of $73.83 on Wednesday. So the lowest traded this morning was $70.36. So it's building the case for another bounce, a small bounce, followed by extension to the downside. Hopefully it's an equality move targeting somewhere between $67.50 to $68.75. So this is the area which I think will be more ideal to buy rather than to sell. So look at I think it may only happen next week. I don't believe we're going to see it tonight. Okay, so by and large I have placed orders to anticipate for a further dip in crude oil prices. Over in precious metal, we can see continued pullback in precious metals. In gold itself, we can see gold actually started to decline and accelerate the downside. And this morning we have a low so far, just bordering at $2,500.75. So it looks like it's going to go below the last Friday's low of and $1,999.60. So if this is the case, we can see a larger degree pullback in a three-wave pattern, ideally targeting 1,943 to 1,975, possibly testing the 1,950 level. So if this is the case, maybe over the next week or so, we can see this level being seen, and it's actually quite a good level to consider going long. Okay, so again, long term is a buy. As far as I'm concerned for precious metals, it's a matter of what level do we go in. Okay, now over in silver, we see a larger reaction. We saw a basically Johnny come lately kind of move. Silver has been very, very firm while gold has been retreating. So yesterday night, we can see a more pronounced pullback in the silver prices as we are speaking. Again, we have marginal low just before the London opening. The low traded so far this afternoon at this moment in time is $23.87. It could actually drift all the way to $23 or to between $23 to $23.75. So this will be a better area to buy if you are of the opinion that the market is a buy. Okay. Now in the dollar itself, we can see a reversal in the dollar. Dollar looks at one point was going down, but yesterday we have a pull up all the way to just under 102, and the high traded is 101.97. Now this bracket of prices is actually exactly a three-wave equality move, and the target area is 101.86 to 102.11, and the price is right now smack in between these two price range. And there's a possibility this could be the top for this move, and if that's a case, maybe the market is looking to come back down again. So in the event the market take out 102.10, okay, the next level to sell will be a 102.30 to 102.70. By and large, is a higher to sell kind of a setup here. So basically, do watch out for continued weakness in the dollar. Okay, and sterling, it is a bit of a disappointment for me personally, because I was targeting a move to 127.35. Okay, the market did not obviously go there. The high traded was just under 127, and the market started to unravel. So basically, my long position was stopped out yesterday with no loss to me. But again, that was a hit and miss. Okay, anyway, the market now is going down. This morning we see the price go down all the way to just under 125, and if we get a bit of a pullback to ideally 125.90 to 126.10, I would like to position a short in this in the sterling now that the market has actually possibly peaked already. Okay, so if that's the case, maybe there'll be a lot more downside. But if I'm going to stay out of sterling because it could still go up, then the better choice for me will be in the euro dollar. Euro dollar, I've always been bearish. We can see that since middle of April, we can see this rounding top here. Market could not go beyond 111. So this is creating a condition for a rounding top, and the market has been coming down. And you can see the prices have actually broken out of this rising channel here, and prices has already broken out 109. although it did not close below 109, but I think it's only a matter of time that it closed below 109. But however, before it go under, I would like to see a bounce, if possible, to 110. So that will allow me to position a short targeting 107. So you can see this is quite a big move here. So if it happens, well and good. If it not, just stay up. Okay. Over in the Aussie market, we can see the Aussie actually went down yesterday to just below 0.67 to a low of 0.6685, which is a bracket of prices which I think is more favorable to be buying. Okay, I think we have seen some kind of support here so far at 0.6670 to 0.6695, and if this causes a market to rebound, upside is 0.6750 to 0.6770 area. So there is hardly any range that is worthwhile taking a trade here. So I'm going to watch this and possibly just monitor and not want to do anything in the Aussie pair here. The one that will actually be quite exciting all the while has been the dollar yen. And dollar yen, we have a low at 133.5 to a high at 135.5 and pull back to 133.75. And this looks at possibly looking to be a three-wave rebound. And if the market can rebound all the way to 135.65 to 136.20, that will be a great area to position short. I think the market is getting ready to come down to test 129.70. Okay, so there's a big range downstairs for us to actually take advantage of. Okay, and over in dollar Canadian, we saw the rebound very similar to the move in the dollar index market rebound and came up all the way to just under 135, in which it hit a pocket of prices, and it has been like more than 16 hours. It has been stuck within this area, and this area could possibly be an area where selling interest may re-emerge. The area is 134.80 to 135.15. Okay, so if we see a slight down in price, is getting ready to resume its downtrend from the most recent high of 136.40. So the immediate target obviously will be 132.70, followed by the last November low of 132.25. And I think the market can go all the way to 131. So this is the target area if you're going to start to look to sell. Okay. And over in Bitcoin, we have seen further weakness in Bitcoin as we are speaking. Bitcoin continue to slide. It's slide below 27,000 yesterday. And as of now, the low is just above 26,000. Getting very, very close to the ideal price. You can see that this is a pullback, a three-wave pullback from a high of 31,000. If this is a three-wave, market could be targeting 25,000 to 26,000. So anyway, between this area of prices, I think we can see possible the re-emergence of buying interest, and that will be a better place to actually position long. Okay, so look out for the possibility here. That's all I have for you for now, and I'll come back to you again on Monday for another update. In the meantime, take care and have a great weekend ahead. Bye bye.